kind of either tax stimulus or fiscal spending stimulus to come. We also think that globally, the Japanese might intervene in their currency, selling dollars, which adds dollars into the global system. We also think that most countries will be adding liquidity as well. We think China needs to increase its liquidity. We also think Basel IV is coming next year, which means the banks buying more bonds. So we think there's a lot of sources of liquidity. Another one is commercial real estate. Eventually, if it remains ugly enough.
After the U.S. Securities and Exchange Commission approved 5 spot Bitcoin ETFs in January, hundreds of institutional investors, including hedge funds, are confident about the cryptocurrency bull market and 2024 crypto asset prices. Pension funds and insurance companies showed a strong appetite for the new products and raised expectations for prices and the bull market. Many believed the steady stream of inflows into the ETFs would continue and Bitcoin's prices would continue to rip higher, which happened between mid-January and March, with Bitcoin first hitting the 2021 all-time high of $69,000 and then reaching $773,000 around mid-March. However, everything has pretty much Vision founder and CEO Raoul Pal is still bullish on crypto asset prices in 2024 and beyond. In a recent video with global macro investor head of macro research Julian B., Pal and B discuss macro events and their impact on the crypto bull market. Pal expects the full transition from macro and crypto spring to summer between now and September and high recoveries in crypto asset values before the 3-month term. His prediction is that cryptocurrencies and digital assets will consolidate between September and November due to election uncertainties, but then the summer to fall transition will be even bigger. Set notifications, subscribe, and like this video. Request more films like this and comment below. Every action improves YouTube's algorithm and channel growth. Enjoy the video and thanks for support.
It feels like there's a risk of a correction. We sold out in Global Macro Investor and in the Exponentialist, our SMH position took profits were up 100-odd%. It feels that the market's a bit overstretched here. Crypto's been doing the reverse. So we actually switched out of SMH and bought more Solana and Bitcoin. So
correct.
So be a little bit cautious with NASDAQ. I don't really like using leverage. I know everybody wants to make as much money as fast as possible, but you're probably better off holding Solana rather than NASDAQ to do that and without leverage. Okay, next question. Trevor Booth. Raoul and Julius. You're now apparently Julius.
I like that name.
I'll call you Julia. I think it's better. If you were to sell your Bitcoin at the end of this cycle and it's high, what do you think the odds would be that you'd be able to rebuy BTC at the lows? Or do you think big investors will be buying it all up as soon as it becomes available to take everything out? For me, it's like, I'm actually not even going to try and time it. My idea is take some lifestyle chips off and then run the rest and try and buy the sell-off. I just think it's very difficult to do. It always looks good in theory. It's very difficult to do. And let's say you've grown your $10,000 and it's now $100,000 and the market then falls 80%. The probability of you putting your 100 grand stack back in is about zero because you'd be worried about losing it. Everyone will be throwing poo at each other online. You know, the US is looking like it's going to arrest everybody in the industry and you'll never buy it. So just, I really, really, really don't like the idea of, hey, it's just easy. I just sell the top and buy the dip.
No, and it's not easy. And I think Raoul's approach to this is actually probably the best approach, which is, as he just said, you know, you don't sell, but you use the pullbacks as opportunities to add to your conviction, which is what we did in Global Macro Investor. We had existing positions, we never closed them, and then we added to those bets at the lows.
Sancheet. Raoul, I'm a newbie in crypto, and since the last 15 days, I've been watching Real Vision. Well, welcome to Real Vision. And again, those of you who want to ask questions, come across to realvision.com. It's free and you can ask us questions. I started investing in crypto, but as you said, I'm also in the 3 major ones. Should I also buy meme coins or gamble a bit, or should I stick and hold the major ones? If you're very new to crypto, just hold the major ones. Try not to observe it, paper trade stuff. Do anything to stop yourself messing this up. You know, I use this don't fuck this up thesis, and big thesis is have 90% just in the majors and 10% you can play around with. But if you're so new, get a feel for the market, understand the volatility, because you think you can deal with the volatility and then you won't be able to, and you'll panic and do the wrong things. Just have your lessons first, learn it carefully. Okay, Sean Owens, in the absence of a significant Fed rate cuts in the US, what mechanisms do you see the US using for introducing liquidity, and how do they impact retail investors for liquidity? Liquidity is not about passing money from the banking system to individuals. It's a process of debasing the currency by introducing excess currency. We think that the Treasury run down the Treasury General Account. We think the Fed stop QT. We think that the end of the reverse repo gets drained. We think that Fannie Mae probably gets congressional approval to offer equity release mortgages, home equity release mortgages, which could add trillions of dollars. We think that there's a kind of either tax stimulus or fiscal spending stimulus to come. We also think that globally, the Japanese might intervene in their currency, selling dollars, which adds dollars into the global system. We also think that most countries will be adding liquidity as well. We think China needs to increase its liquidity. We also think Basel IV is coming next year, which means the banks buying more bonds. So we think there's a lot of sources of liquidity. Another one is commercial real estate. Eventually, if it remains ugly enough, the Fed could create a special purpose vehicle to put all these loans in. We've seen that historically in the past, particularly in the savings and loan crisis in the early 90s. That's another method of liquidity. So there's lots and lots of different avenues, and ones we haven't even covered, that they will look for any answer.
Pal's banana zone theory is based on the fact that global liquidity goes through cycles, which are caused by central banks' balance sheets, especially during their expansionary and peak times. Pal thinks that we are almost in one of these cycles, where liquidity conditions have bottomed out and are expected to start rising again, rising quickly at any time and continuing until they reach their peak around June 2025. The Purchasing Manager Index PMI is a good way for him to predict changes in liquidity conditions. It is a survey-based indicator of business conditions and economies around the world. Pal thinks that PMI is a few months behind the overall economy, but that asset prices should start to rise quickly soon as manufacturing activities improve around the world S&P. In May, manufacturing activities picked up in most developed economies, according to the Global Purchasing Managers Index. More than 40% of global manufacturing PMIs are in expansion, which is almost double the 25% seen at the start of the year. In the US, May was the busiest month for manufacturing since the beginning of 2023. In the same way, manufacturing activity in the UK reached its highest level since July 2022, and Japan saw its first signs of expansion in almost a year. Pal and B think this data will get even better in June, showing that these economies are still quite strong despite what has happened in the past few years. Pal thinks this strength will last for a lot longer because central banks can't let even the tiniest bit of trouble happen before they step in to save the day.
And just one more point on that. I think the most important thing to monitor is what we call excess liquidity. So there we're looking at sources of private and public liquidity. So you're looking at, let's say, the balance sheet or Fed net liquidity, if we're talking about the US, plus USM2 minus nominal GDP. So the way it works is, as long as there's excess liquidity available in the system, so liquidity above what is being consumed by nominal GDP, in theory, this money then can be financialized. And that's why this measure of liquidity, the ones that we track at GMI, are the most correlated with equity PE multiples on a forward-looking basis. So that started to tick higher again. So Tesla is funny because just this week I tweeted a tweet about this kind of mini inverse head and shoulders pattern that Raoul and I had been tracking for a while. We've cleared the neckline. We'd like to see it a little bit higher before it's confirmed. But it's funny because we were almost calling it it's like mini-me, because there's that little mini head and shoulders. And then if you zoom out, there's the really, really big one. So I think the odds are that we're in the process of forming the right shoulder. Now, if you're in the pro macro tier, you will have read a piece that Raoul and I put out earlier this year on Tesla and the fact that, it's an AI company, but it's also a car company. So part of Tesla's, let's say, earnings are linked with financial conditions in the liquidity cycle, but then there's this whole other part, which is the larger portion, which is linked to the business cycle because car sales are still weak, industrial production is still weak, right? So I don't know if we need to see an ISM above 50 for Tesla to start to move. I think it's starting to move now. But yeah, any improvement in the ISM would mean that, earnings cycle and everything else then starts to kick off. So that would only be bullish. I don't know. Do you agree? I think you agree, Raoul.
Yeah, totally. I think I think as soon as car sales start going up again, then Tesla then gets probably re-rated. So earnings go up and then P ratio probably explodes higher as people start pricing in the forward-looking stuff. But right now, people are just looking at the car sales.
As central banks start cutting rates and loosening up on their quantitative tightening policies, Pal predicts an exciting time for the cryptocurrency market, with prices for crypto assets likely to either rise sharply or completely go bananas. This is called the banana zone, and Pal thinks it could start at any time. Unlike some others, Pal is quite optimistic about the US and the global economy as a whole, and his optimism comes from the fact that central banks are likely to step in and save the day. When there is even the slightest bit of trouble, they can't afford another global financial crisis, so they keep putting it off by printing money on a regular basis. Pal thinks this cycle will last until at least 2030, when he thinks AI and robotics will completely change the world. Until then, investing in cryptocurrencies like Bitcoin, Ethereum, and others will help people stay ahead of currency devaluation and debasement. What do you think about Raoul Pal's analysis and his predictions for the cryptocurrency market in 2024 and beyond? Please share your thoughts, comments, and observations below, and don't forget to give this video a thumbs up. Follow the channel and turn on post notifications to see more movies like this.